How secure do you feel about your financial future? A question that resonates with many of us, especially in a world where the economy is ever evolving and the dynamics of money management are continually shifting. Welcome to an enlightening journey into the realm of financial literacy. But what is financial literacy? Simply put, it is the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. It's a life skill that everyone needs, regardless of profession or background. In the bustling marketplace of the 21st century, financial literacy has become a cornerstone of personal success. It's no longer just about earning money, but more about how we manage and grow it. Each decision we make, from opting for a credit card to investing in a retirement plan, is a testament to our financial literacy. The importance of financial literacy cannot be overstated in today's economy. It is the compass that guides us through the maze of financial decisions that await us at every turn. It helps us navigate through the complexities of the financial world, empowering us to make informed decisions that shape our future. Imagine being able to create a budget that works for you, understanding how loans and interest rates affect your debt, or knowing how to invest wisely for your retirement. These are just a few examples of how financial literacy can enhance your life. But financial literacy isn't just about personal gain. It's about contributing to a more stable, secure society. When we are financially literate, we not only improve our own economic well-being, but we also contribute to the broader economy. We become more savvy consumers, prudent savers, and informed investors. Financial management is a crucial skill that everyone should master. It's not just for the Wall Street whizzes or the finance gurus. It's for the college student managing their first budget, the young family planning for their future, the entrepreneur starting a new business, and the retiree navigating through their golden years. So, let's embark on this journey together. Let's unravel the mysteries of the financial world and take control of our financial destiny. Understanding your finances is the first step to financial freedom. Do you know where your money goes each month? Perhaps you've asked yourself this question more than once. Well, the answer lies in mastering the art of budgeting. Creating a budget is like sketching a financial blueprint. It helps you track your income and expenses, making you conscious of your spending habits and enabling you to save more efficiently. Let's break it down into simple steps. Step 1. Identify your income. This includes your salary, any freelance work, and any passive income sources. Step 2. List your expenses. Start with your fixed expenses. These are the bills you must pay every month, like rent or mortgage, utilities, and insurance. Next, note down your variable expenses, such as groceries, transportation, and entertainment. Step 3. Compare your income and expenses. If you're spending more than you're earning, it's time to make some changes. Look for areas where you can cut back, like eating out less or canceling unused subscriptions. But budgeting isn't just about cutting back. It's also about saving. Which brings us to step 4, set savings goals. Whether it's for an emergency fund, a vacation, or retirement, having a clear goal can motivate you to save. Now, maintaining a budget requires discipline and consistency. Here are a few strategies to help you stay on track. First, use a budgeting tool or app. These can automate the process, making it easier to track your spending and savings. Second, review your budget regularly. This will help you spot trends, adjust your spending, and stay focused on your goals. Third, make saving a priority. Treat your savings account like another bill that needs to be paid each month. And finally, be flexible. Life is unpredictable, and your budget should be adaptable. If you overspend one month, don't beat yourself up. Instead, adjust your budget for the next month to compensate. Remember, a budget isn't a limitation on your spending. Rather, it's a plan that empowers you to spend wisely, save effectively, and achieve your financial goals. A well-planned budget is your roadmap to financial security. Ever wondered what a credit score truly means? Imagine it as a report card for your financial behavior. It's a 3-digit number that lenders use to assess how likely you are to repay your debts. In most cases, the higher your credit score, the better. It can affect everything from whether you get approved for a loan or a credit card to the interest rates you're offered. Having a good credit score can save you thousands of dollars in lower interest rates over time. So, how is this mysterious number calculated? Major credit bureaus look at 5 key factors: your payment history, the amount of debt you owe, the length of your credit history, the types of credit you've used, and any new credit you've applied for. Now let's shift gears and talk about loans. There are many types of loans, each serving a different purpose. Personal loans can be used for any personal expenses. Auto loans are for buying vehicles, and mortgages are for purchasing homes. Student loans are there to help cover the cost of education. When you take out a loan, you're agreeing to pay back the amount you borrowed, plus an additional amount called interest. The interest rate is usually a percentage of the amount you borrowed and can be fixed or variable. A fixed rate stays the same throughout the life of the loan, while a variable rate can change based on the market conditions. Loans can seem intimidating, but they're simply tools that can help you reach your financial goals. Just remember, it's crucial to borrow responsibly. Don't take on more debt than you can handle, and always make your payments on time. Understanding credit and loans is key in your financial journey. They can be powerful tools when used wisely, but they can also lead to financial hardship if mismanaged. Good credit opens doors, and understanding loans helps you step through them. Can your money work harder for you? In the realm of financial literacy, investing is a key tool that can help your money grow over time. But what exactly is investing, and how does it work? Simply put, investing is the process of allocating money in the expectation of generating an income or profit. It's about making your money work for you, even when you're not clocking in hours at the office. There are several types of investments you can consider. Let's start with stocks. When you buy a stock, you're buying a small piece of ownership in a company. If the company does well, your stock can increase in value and you can sell it for a profit. However, if the company underperforms, the value of your stock may decrease. Next, we have bonds. These are essentially loans you give to a company or a government. In return, you receive interest on the money you've lent. Bonds are generally considered less risky than stocks, but they also typically offer lower returns. Then we have mutual funds. These are investment vehicles that pool money from many investors to purchase a diversified portfolio of stocks, bonds, or other assets. Mutual funds offer diversification and professional management but come with their own set of fees and risks. Now let's talk about diversification. It's a strategy that involves spreading your investments across various assets to reduce risk. You've probably heard the saying, "Don't put all your eggs in one basket." Well, that's exactly what diversification is all about. By diversifying your investments, you can potentially reduce the impact if one of them performs poorly. Remember, investing isn't about getting rich quick. It's about growing your wealth steadily and consistently over time. It's about understanding the risks involved and making informed decisions based on your financial goals and risk tolerance. Investing wisely can unlock a world of financial opportunities. So take the time to learn about different investment options, understand their risks and returns, and make informed decisions that align with your financial goals. After all, the best investment you can make is in your financial education. Are you prepared for life after work? It's a question that might seem distant if you're in the early stages of your career, but it's never too early to start planning for retirement. Retirement planning is like preparing for a long journey. The sooner you start, the better prepared you'll be. And the journey is more than just saving money. It's about making that money work for you, so when the time comes, you can sit back, relax, and enjoy the fruits of your labor. Now let's talk about retirement accounts. These are special accounts designed to help you save for your golden years. There are two main types of retirement accounts that you might have heard of: 401(k)s and IRAs. 401(k)s are offered by employers, and they're a great way to save for retirement, especially if your employer matches your contributions. Think of it as free money towards your retirement. But remember, there are limits to how much you can contribute each year, and you'll typically face penalties if you withdraw the money before you reach a certain age. On the other hand, we have individual retirement accounts, or IRAs. These are accounts that you open on your own, outside of your employer. They come in two flavors: traditional and Roth. With a traditional IRA, you make contributions with money you may be able to deduct on your tax return, and any earnings can potentially grow tax-deferred until you withdraw them in retirement. A Roth IRA, however, is a bit different. Here, you make contributions with money you've already paid taxes on, and your money may potentially grow tax-free, with tax-free withdrawals in retirement under certain conditions. The key is to understand your options and choose the retirement account that best suits your financial situation and your retirement goals. And don't forget, the magic of compounding interest can make a huge difference over time. So, start early and contribute consistently. Plan today for a secure and comfortable retirement tomorrow. After all, retirement isn't the end of the road, it's a new beginning, and it's up to you to make it a great one. Are you prepared for the unexpected? That's a question we should all ask ourselves when it comes to our finances. We live in a world full of uncertainties, and while we cannot predict every twist and turn life may throw at us, we can definitely prepare for it. That's where an emergency fund and insurance come into play. Think of an emergency fund as your financial safety net. It's a stash of money set aside to cover the financial surprises life throws your way. These unexpected events can be stressful, not to mention expensive. They could range from losing your job, a sudden health issue, or even an unplanned home repair. Having an emergency fund can provide peace of mind and stability during such times. But how much should you save? A good rule of thumb is to have enough to cover 3 to 6 months' worth of living expenses. Start small if you need to, and remember, it's not about how much you save, but the habit of saving that truly counts. Now let's move on to insurance. Insurance is another way to protect yourself financially. It's a contract called a policy that you sign with an insurance company. In exchange for your regular payments, known as premiums, the company agrees to pay for potential losses or damages you might incur in the future. There are many types of insurance, each designed to protect you in different ways. Health insurance, for instance, can help cover medical costs. Life insurance can provide for your loved ones after your death. Auto insurance can cover repair costs if you get into a car accident. The right insurance for you depends on your personal situation and needs. To sum it up, an emergency fund and insurance are two crucial elements of a solid financial plan. They provide a safety net to help you navigate through life's unexpected events without derailing your financial stability. Remember, it's not about expecting the worst, but being prepared for it. Preparation is the key to weathering life's financial storms. So, are you ready to face the unexpected? Does tax season fill you with dread? Well, let's change that by making taxes less of a mystery and more of a manageable part of your financial life. First, let's understand what taxes are. Simply put, taxes are compulsory contributions to state revenue, levied by the government on workers' income and business profits, or added to the cost of goods, services, and transactions. These funds are used to support public goods and services like roads, schools, and healthcare. Now, on to filing taxes. This is a process where you officially report your annual income and calculate your tax liability to the government. If you've overpaid your taxes throughout the year, you might receive a refund. If you've underpaid, you may owe the government more. But how do you know if you've overpaid or underpaid? This is where tax deductions and credits come into play. Deductions reduce the amount of your income that's subject to tax, while credits reduce your tax bill directly. Common deductions include student loan interest, mortgage interest, and certain medical expenses, while credits might include the child tax credit or the earned income tax credit. As for tax-efficient investing, it's a way to structure your investments to take advantage of tax laws. For instance, certain investments like Roth IRAs and 401(k)s allow your money to grow tax-free, meaning you won't owe taxes on the income you earn from these investments. But remember, it's essential to keep good records. This includes keeping track of income, expenses, and any potential deductions. Good record keeping can save you a lot of headaches when tax season rolls around. Lastly, don't be afraid to seek help. Tax laws can be complex, and it's okay to ask a tax professional for assistance, especially if your situation is complicated. Remember, while taxes can seem daunting, they're just another part of your financial journey. Understanding how they work can help you make informed decisions and potentially save you money in the long run. Knowledge is power when it comes to navigating taxes. Are you aware of the financial traps that can derail your plans? In the world of personal finance, there are pitfalls aplenty. One of the most common is accumulating high-interest debt. This can happen when you rely heavily on credit cards or take out loans without fully understanding the terms. High-interest debt can quickly spiral out of control, leaving you struggling to keep up with the payments. It's like stepping into quicksand. The more you struggle, the deeper you sink. Another trap is falling for investment scams. These schemes promise high returns with little risk, but in reality, they're designed to take your money. It's like being lured into a maze with the promise of a treasure at the end, only to find yourself lost with no way out. Then there's the pitfall of neglecting to save for emergencies. Without a safety net, an unexpected expense can lead to financial disaster. Imagine walking a tightrope without a net. One misstep, and you're in freefall. And let's not forget about the trap of living beyond your means. This happens when your expenses exceed your income, causing you to dip into your savings or accumulate debt. It's like trying to fill a bucket with a hole in the bottom. No matter how much you pour in, it's never enough. There's also the danger of not planning for retirement. Many people underestimate how much they'll need in their golden years, leaving them financially unprepared when the time comes. It's akin to setting off on a long journey without packing enough supplies. Finally, there's the pitfall of not staying informed about your finances. Without regular check-ins, it's easy to lose track of where your money is going. Imagine trying to navigate a ship through turbulent waters without a compass. Avoiding financial pitfalls starts with being informed. Knowledge is power, and in the realm of personal finance, it's your best defense against these common traps. So arm yourself with knowledge and you'll be well equipped to steer clear of these financial quicksands. Do you know of the tools that can help you manage your finances better? As we navigate through the world of finance, it's essential to have a compass in the form of financial planning tools and resources. Let's start with budgeting apps. They can be a game changer for those who struggle with keeping track of their income and expenses. Apps like Mint, YNAB, You Need a Budget, and Pocket Guard can help you categorize your spending, set saving goals, and even provide insights into your spending habits. For the investment enthusiasts among us, platforms such as Robinhood, E*Trade, and Fidelity offer a way to buy and sell stocks, bonds, and other securities right from your phone. They provide research tools, real-time market data, and educational resources to help you make informed decisions. Then there's the world of robo-advisors, automated platforms that use algorithms to manage and optimize your investments. Companies like Betterment, Wealthfront, and Acorns can help you start investing with minimal effort and at a low cost. For retirement planning, tools like Personal Capital and Bloom can analyze your 401k and IRA accounts, giving you a clear picture of your retirement readiness and offering suggestions for improvement. What about managing debt and credit? Apps like Credit Karma and Debt Payoff Planner can help monitor your credit score and strategize how to pay off your debts faster. There are also numerous online platforms offering financial education. Websites like Investopedia, NerdWallet, and The Balance offer comprehensive guides and articles on a wide range of financial topics. Remember, these tools are meant to assist you, not do all the work for you. They provide valuable insights, but it's up to you to make the decisions. Always be sure to do your own research and consult with a financial advisor if you're unsure. So, which tools will you add to your financial toolbox? It's time to embrace the digital age of finance and make these tools work for you. Use the right tools to take control of your financial destiny. Are you ready to take control of your financial future? As we wrap up this informative journey, remember that this is just the beginning. The world of personal finance is vast and constantly evolving. There are always new strategies to learn, new tools to use, and new challenges to overcome. Just like mastering a new language or learning to play a musical instrument, becoming financially literate takes time, practice, and patience. It's not a destination, but a lifelong journey. But don't let that intimidate you. Every step you take towards financial literacy is a step towards a more secure and fulfilling life. And remember, knowledge is power. The more you understand about personal finance, the more equipped you'll be to make smart, informed decisions. You'll not just be able to navigate the financial world with confidence, but also make it work in your favor. It's about making your money work for you, rather than you working for your money. Be proactive. Don't wait for a financial crisis to strike before you start learning about personal finance. The best time to start is now. And the best way to start is by setting clear, achievable financial goals. Whether it's saving for a house, paying off student loans, or planning for retirement, having a goal can give you a sense of direction and purpose. Keep exploring. Be curious. Don't shy away from asking questions, no matter how basic they may seem. The world of finance is full of jargon and complexities, but don't let that discourage you. There are plenty of resources out there to help you understand and navigate these complexities. And finally, remember, financial literacy isn't just about making money. It's about achieving financial freedom. It's about being able to make choices that allow you to enjoy life today, while also planning for tomorrow. So, are you ready? Your journey to financial literacy starts now. Take charge and shape your financial future.